So in the previous videos, we talked about the platforms that we use to be able to trade in the markets. Now, what we're going to be talking about next or in the following videos are concepts that we use or should be able to identify once we start looking at the charts. Okay, we talked about Japanese candlesticks. So now we're actually going to be able to start knowing how to read these Japanese candlesticks charts. Now, the first concept that you have to be familiarized with or to know is market structure. And there are different types of market structure, and the market structure is classified as follows. First, we have what we call uptrends. We have downtrends and consolidation. Okay, during an uptrend, it's usually when we see market, as the name it says, is trending upwards. That is when you would want to start looking to make decisions in finding a buy setup in your trading. A downtrend is also, as its name says, it's usually when a market is trending downwards. And in these type of market structures, we try to identify or try to find potential sell setups. We also have what's called consolidations. Usually, the moment when a market starts consolidating, it's usually times of undecisiveness. Okay, so you probably want to stay out or not force a trade during these market conditions. Now let's go ahead and head over to TradingView. And we're going to identify different types of market structures. Okay. First, let's go ahead and talk about this here so you guys could see it a little bit more visually. So we have what's called an uptrend. Downtrend. And consolidation. Okay, so like I mentioned, uptrends usually is when a market is trending upwards. So in a healthy uptrend or a perfect uptrend, what we would like to see is for price to be able to make higher highs and higher lows. Like I said, usually it's when you would like to look for potential buys during these markets. Since market is trending upwards, it is better to only look for buy setups during these types of market structures. On a downtrend, we usually have lower highs and lower lows. This is on a healthy or perfect downtrend. Now, why do I say perfect? This is because we don't usually always see these types of market structures, although we're still in an uptrend or a downtrend. Meaning that although we are in an uptrend, we could potentially sometimes see markets creating lower highs and lower lows, but still be in an uptrending condition. Also, for downtrends, we may also see higher highs and higher lows, but still be in a downtrending market condition. And for consolidations, like I mentioned, it's when markets are pretty much indecisive and making higher highs and higher lows and lower highs. Usually we could identify these market conditions by seeing how markets are just going in a straight line or inside a specific range. Okay, but they're not actually moving a certain direction upwards or downwards. So now that we got this out the way in a more visual manner, let's go into the charts. As you guys can see, last week, since on Wednesday morning, about 9 a.m., we've had a really nice downtrending market, meaning that we can identify visually that market has been going downwards, and we could also identify that the market has been creating lower highs and lower lows, lower highs, lower lows, lower highs, and lower lows, lower highs and lower lows we have here as well. But as you guys can tell, around this spot or at the beginning of Thursday morning, we could see that market actually started doing what? Consolidating, right? Started creating a range or trading in a straight market. So right off the bat, we could identify how GBP USD or British pound and US dollar has been trading downwards by Wednesday through Thursday. And on Thursday morning, we actually started consolidating throughout Thursday morning and all of Friday. So we have a downtrend and consolidation. So let's look for an uptrend now that we have that out the way. We could start looking for uptrends. As you guys can see here, we have a higher high, higher low, higher high, higher low, and higher high. Okay, we could identify an uptrend condition in the market. Like I mentioned earlier, we will not always have these perfect lower lows, lower highs, or higher highs and higher highs, or sorry, lower highs. But instead, we might identify a little bit of manipulation inside of that market structure. As we can see here, we have an uptrend condition, but at the same time, we don't actually have a perfect market structure with higher highs and higher lows. As you guys can see here, we made a higher high, a higher low, but here we started making a lower high, and then finally created a higher high. Made a higher low here, but once markets started coming down from this high, we actually made a lower low instead of a higher low. But as you guys can see, we have still kept more or less a bullish market condition. As well here, we can see how this low created a lower low afterwards, etc. So it's important for you guys to start marking your charts out with the trending line. That way you guys can start identifying these higher highs and higher lows or lower lows and lower highs in a downtrending condition. You also want to be able to identify consolidations. As you guys can see here, we actually had a big consolidation area. Okay, so it's better for you guys to stay away or try not to create a lot of decisions into buying or selling during a consolidation phase. Of course, we could look at different time frames to help us identify the overall trend from other time frames. That this would help us be able to make clear decisions, because even though if we are consolidating in a specific time frame, we might actually be trending on a different time frame. And we have here how we made a lower low, higher low, lower low here. Can't really clearly see it on a 4-hour chart, but we head into a daily, we could actually see a little better on how price has been trading or making a different type of market structure. We'll talk about correlating timeframes later in a different video, but for now, just focus on creating these types of chart markups for you to be able to identify market structure a lot better. Okay, another way that you guys could do, or another thing that you guys could do, is head over to the templates up here. And if you don't want to have your charts busy while you're trading and only be practicing market structure, you could have a specific template for that as well. If you see, if I change to my levels template and I head over to the same GPUSD chart, you can see that there's nothing drawn on my chart, and I could keep a different template separate to where I actually mark my charts with specific things, etc. But with that said, that's going to be all for this video. On our next video, we're going to be talking about support and resistance, which is another concept that will help us identify or to help us make decisions into the marketplace, whether to buy or sell. Okay, adding all these components that I will be teaching throughout these videos, it will give you a clear picture as to how to read the market and how to make more concrete or a lot more based decisions, whether it's a buy or a sell. But with this video will be all we're going to be seeing today. If you are new to this channel, I suggest you hit that subscribe button and notification bell, because I will be providing a lot more information throughout this month of September. Also, like this video if you liked it, and make sure to comment anything that you would like me to talk about in the future. With that said, that will be all for this video, and see you guys on the next one.